Oh boy.
Good afternoon, everybody. This is Grant with Not Crypto Bros. We got Austin and Jay, and Jarrett's being a little finicky with his audio, so he's diving out and coming back here shortly. He's not in Colombia today. He's in lovely Northeast. Boom, there he is. Can you hear us now, sir? He can't hear anything, so he's going to be a hangnail there for a second. We were just talking about BUSD, and I was under the impression that they just announced that they were going to delist it. But Aussie, you were just saying
this was announced like months ago.
Yeah.
It happened when Binance announced that they were going to be converting all USDC on the exchange to BUSD, and essentially Coinbase soon afterwards announced, hey, we're going to take BUSD off our exchange and convert it to USDC. So it was just a tit for tat move between the two of them.
Okay, so I wasn't mistaken that the news was just being floated again, but I thought I remembered them mentioning something like that before, but like it's just the headline repercolating because, you know, CZ's in the news and stuff.
Exactly. It's just repercolating because, oh, Binance FUD, we're talking about stable coins, BUSD just got a bunch of FUD. So, they're delisting. No,
Gotcha.
They were already delisting.
Gotcha. Okay. Jarrett, can you hear us? Are you here? No, Jarrett just
great time to talk about him. He can't hear us.
Yeah.
I mean, he can't say that we're talking about him behind his back if he's actually here.
Exactly. Should we talk about his haircut or what are we
thinking? Let's do it.
He's got a great haircut. So what else is going on in crypto then that we need to be talking about? We were just paying attention to Real Vision Collective and NFTs. And Jay, you made the comment, are NFTs back? What made you go there?
You guys sending me all of this NFT information. I think maybe in the last 2 weeks, you've shown me 3 different projects that you were excited about. And I don't have any NFT projects on my radar at all. I'm not paying attention to them. And you know, so we started talking about it when what do you call it? The Bitcoin NFTs with the inscriptions.
The ordinals and inscriptions.
Yeah. And it started making me think, you know, last year or it was the year before, I forget. But Ethereum NFTs started picking up. And I think that had a lot to do with the price of Ethereum shooting up in the way that it did, and some other coins as well. And I'm thinking, oh, well, maybe this is going to have a similar effect on Bitcoin this year. And so maybe that's an investment. I still can't wrap my mind around just there's so many different NFT projects. Like, how are you guys deciding which is the right one to get into? You know, that seems like hit or miss. But if we talk about like investment strategies, and this isn't an investment advice, but taking some of your strategies, Grant, I remember you talked about the reason why you ended up investing in Nintendo was because you saw that they were doing some cool stuff with Niantic. You can't get into Niantic, but you can get into Nintendo. I'm not really so concerned about the NFTs, but I see what's happening with the NFTs. Maybe I'll just get into the underlying technology and get into Bitcoin.
I mean, if I could respond, and guys, push me around as you need. And I think Jarrett's audio is back. Give us a thumbs up. Great. You know, you make a great point about my investment in Nintendo. Like, I didn't know much about Nintendo until much later, but I paid attention to the technology that Niantic was doing with its one game. It had this early game, and it was rudimentary. And I was so geeked out about how they were tying these like, and we have this in Pokemon, these dojos where people battle it out. They were pulling that data from the historic register's office. That was just public data. And you'd have to walk this Niantic game before Pokemon. You'd have to walk and you'd go to this little thing, this big pylon, and you could click it and like a historical marker would come up within the game. So I was learning about real world. I was getting out of the house, and I started speculating on what this could mean for gamers. And then they announced, hey, Nintendo. And I was like, game over. They're making this IRL for people. And it was like augmented reality. So I was nerding out about the tech first. I think that's what is starting to happen with NFTs is I think everyone interested in Web3 is starting to go to their corners. People are starting to go to what they like. If you follow crypto Twitter, people are starting to niche out on what they want. Not Binance. No, what do you mean by that, George? People are starting to go to their corners for if they're into GameFi, they're doing that. If they're into TradFi, Aussie's spending a lot of time in DeFi. He's spending a lot of time with his trading bots, a lot of time with the effects of what's going on macro markets and how that affects his business and his investors. I know that Jarrett and I are paying attention, and Jay, this might be a place you want to pay attention to, NFTNow and how they're using and I posted it in our group and I'll send it to you, but Medved is the guy, he's at NFT Paris right now, and they launched a publication, NFTNow. It's been around for a little while, but they have committed to 0 pixel tracking, 0 ads, 0 banner ad placement. And we've talked about this and lots of people have speculated about it, but they're minting the NFT to do micro payments and micro exchanges as an alternate to advertising. I know that, the three of us, Jay, Jarrett, and I, have all done Not Crypto Bros, and we speculated. And then Spotify comes out with NFTs, and it's like, okay, I think it's starting to roll out in an easy to use case, a thing to get our head around in such a way that people can then go to the thing that they already love. And so I think that's happening there. I see some people nodding. We got this comment from George Payet. Anyone pick up the mic there and run with that.
I mean, Spotify isn't the only one. Shopify.
Talk to me about this. I didn't know that they did this.
So Shopify is using NFT gating and has allowed NFT gating on certain web pages now as part of the whole Shopify experience. And so the using NFTs for exclusivity and for access is becoming kind of a huge feature. If you've looked at the Starbucks NFT, so my co-host on Decentralized News, he's in the Starbucks Odyssey beta test, and the NFTs are selling for thousands of dollars now.
For Starbucks?
Yeah.
What?
Yeah, they're so rare.
I was looking at minting that shit for like, what was it? Ridiculously low.
Mm-hmm.
It was silly.
Yeah.
So it's going. That is nuts.
And then trading volume on NFTs has been going up for 3 months straight now.
Really?
The volume on OpenSea has increased 66% in the last 3 months.
Is it still like the washing though? Like initially it was just a bunch of NFT washing, right? Just me trading to my friends.
No. Like it's like actual volume is up more than double what it was 3 months ago. So volume on NFT trading is not at all-time highs, but it's really bouncing back.
So I'm looking at the Shopify gating, and FYI, for those who don't know, I have a web design company, and we've been looking at WordPress NFT gating for over 6 months now. And it's a very simple function to like drop a contract address of the collection. And if anyone has anything within that collection, it just reads the blockchain and gets them access. And we've been trying to race as a web design company to stay cutting edge, as a local web design company. Obviously, Shopify is a behemoth. How can we be ahead of the curve and speak to it, have our own membership access? It looks like it's limited right now to Ethereum, World of Women, Doodles, what's the one, Kitty Friends or whatever they are. They're all using it. So that's a pretty intriguing thing. But I didn't know this about volume going that high. Does the OpenSea removing fees have anything to do with that?
It was happening before OpenSea removed fees. The removing fees on OpenSea's only been 2 weeks, basically, since the Blur airdrop and the whole battle that they're going on with Blur. So it was happening for two and a half months before that.
Yeah. So I just posted in our private chat, Shopify's doing Ethereum, Polygon, Solana, and Flow. They don't have to worry about Solana because it's down half the time. And that, well, this is interesting though. Reliability is super important, because let's say they had a membership to my web design company and they wanted to go do some updates or read one of my courses, and just that particular network was down. I mean, I don't know. Go ahead. I heard someone take a breath there.
No, you're
No,
good to go.
I just can't imagine. I can't imagine being tied to a network that doesn't work. So on that, does Solana have a future?
No, I don't think
Not-
Solana's
not
got a
if it
future.
keeps going down.
Well, I mean, Frank with DeGods. So part of what I think is going on right now with NFTs is there's also Paris NFT Paris is going on, or was going on, the last 2 or 3 days. And anytime one of these big events happens, there's just this swell of interest, and also possibly market makers. So I think that has some of the sentiment, at least of the last few days, but I did not know the volume was that high, Austin.
So
Yeah.
so I want to push back, Austin, if I can. Grant, there's so many events now that every week there's an event. So I take events off the table, as I just think that it's like ETH Denver is going on right now. That's a huge event.
Oh, I didn't know
NFT Paris is going on. Things are, there's big mints like the Raoul Pal mint, and maybe we'll get into that. There's NFTNow is coming in. And I just think the fact that because Ethereum is down even 65% of its all-time high, the more Ethereum goes down, the more people are going to be like, all right, let me sweep these even cheaper floors. Because then the 50 ETH floor is 66% off in US dollars or in fiat currency. So this has been happening for a while. I think it's a lot to just blame it on an event. If anything, you could make an argument that during an event, it would go down because people are at the event and no one's sitting there trying to mint. The reason why you're there is because of your community, probably. You're not going there to then mint. You can do that from anywhere. You could stay in whatever country you're from. You don't have to go all the way to one of the most expensive cities on the planet to do that. So I just think overall NFTs are up. I think Starbucks plays a huge role in that. I think that when you have a global brand like Starbucks, when I think there's 23 million people in their membership program, it's one of the biggest membership programs on the planet. And then so for them basically to orange pill, I know that's a Bitcoin term, but for them basically to get people into Web3 without having them know it. I mean, that is true. I was talking to my father. That is true technological adoption. No one says I'm going on the internet when they go on Zoom. They say I'm going on Zoom, because the internet's now so ubiquitous. And so once things become so ubiquitous and omnipresent, that's technological adoption. So I just think in general, people are also waking up to the fact that NFTs are way more than PFPs. They're really about community, and they're about exclusive community. And so talking about Shopify, Spotify's rumored to do this. The new CEO of YouTube has said that they're going to have token gated communities. And I guess I'll go right to George's comment. And he's like, yo, crypto Twitter is segmented, Web3, trading, NFT, and mining. Welcome to the new internet. I tweeted something the other day and I said, we're so early that most Bitcoin maxis don't own NFTs, and most NFT only traders can't explain the halving to me. So,
I agree with that.
We're very, very, very segmented. I know a lot of people in NFTs who have no idea about the Bitcoin halving. They have no idea. They're maybe starting to look at Bitcoin only because of the inscriptions and the ordinals, but it's still so early. But I love to think about, for us as creators, what we're going to be able to do. When we have our NFTs out to the people that we want to have them out to our communities. You're going to be able to create exclusivity like we've never, ever, 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 ever seen before. And I was on a call earlier with Tomas from Collabs. It's a Web3 agency. They've come on More Than Blockchain. We were talking because he's going to help me launch my NFT. And I finally know more or less what I want to do with my NFT. And I was saying, even beyond the NFT, I'm really excited. Probably, I think it's going to happen next summer or maybe 2025 when there's a lot more liquidity. But to finally have an IRL bash. And the only people that are going to be invited will be people who have been on my podcast. Jay Harris, if he hasn't come on my podcast by then, he will be an exception because he has a VIP pass. But everyone
no, he
else,
doesn't. Not without his Canadian papers.
Well, that's some web. Jay has his Web 2 problems that are different than his Web 3 problems.
Get it together.
But I'm super excited to do that because the only way you're going to get in there is if basically you've come on and your proof of work has been sitting with me and talking about whatever you're doing. And by the time that happens, there are going to be some heavy hitters in that room, and it's going to be a really exciting place. And you're going to be happy to be in that exclusivity of the More Than Blockchain guest exclusive pass. So I just think the future is all about really tight knit communities that are fluid and that are transnational and aren't bound by really anything, honestly. So
I still have a massive question mark in my brain. Let's take NFTNow as an example. Not an endorsement, not financial advice. I'm intrigued at what they're doing a website, a publication about NFTs, the whole industry, with a mint, and that's great. As a business model, I don't flippin' get it. We are like, I don't get it. Once you mint once, let's even say you minted for 1 ETH, and let's say you have 1,000 true fans. Great. What are you sitting on? You're sitting on 160,000 US, right? At $1,600 at 1,000 each. Maybe 1.6 million. I'm doing my math wrong. Let's just even say it's 1.6 million. I don't even care. What about next month when I fucking got to pay everybody?
So let's just play this out. I have my NFT project and I launch it and I have my 1,000 true fans and they all pay 1 ETH and I get that 1.6 million.
Sure.
Well, if I'm savvy with it, that can last a decade, right? What some people are doing. I mean, that's
Liquidity farm it.
Yeah,
it's
depends on where you are. Like,
it's $160,000 a year grant. I mean, I'm not taking into account taxes here, but that's a lot of money. 160 a year.
And just liquidity farm it, because
I was gonna say liquidity farm it, and what some of the projects are gonna do, like what Rao's gonna do, is they're gonna take some of the money and they're gonna buy into they're gonna sweep floors of NFT projects that are massive, and they're gonna wait for those to go up and then sell them. When you have that much liquidity in a down market, it's fun. Like you could do whatever, like So I think as long as you take the money,
I can't get my head around that.
Yeah.
All you got to do is take the money and just reinvest it, not pour all of it directly into the community, but make sure that there's water for the community to hold 4 or 5 years down the way. A lot of NFT projects, I feel like they launch, they get paid, they pay themselves out, and then they walk away.
Yeah. All you've got to do in this market is have liquidity. If you've got liquidity, you've got the biggest project in the world, because there are a ton of opportunities to liquidity farm as long as you have the liquidity.
But you don't have that liquidity. That's your budget.
Yeah, but your budget, you don't. I'm not going to spend $1.6 million in a month. You're not going to spend $1.6 million.
So let's say you hold it for a year, or let's say you do what you say. Do what you're saying. You stake it all, and you get 10%, and your annual budget now on 10% is $160,000. That is one employee. One employee.
You don't need to.
Maybe, but if that's
depending on where you're hiring the employee, but I mean, there are ways to sort of stretch that out and make it work if you're thinking about it.
I know, but all of you are explaining to me tightening your belt. Well, but you've all said that. You've got to tighten your belt and make it stretch a decade. You got to tighten your belt and use it on speculative projects, which I'm totally cool.
Tightening your belt necessarily, because all you're doing is making sure that you're farming it in a way like you can make way more than 10% in a year. That's if you're literally just sticking it in an ETF or farming solely stable coins.
Guys, I have been staking in all of these experiments since 2017. And I have never actually realized, even when Anchor Protocol was promising 20% a year, I sat on that for over a year and it never actually deposited that to me. I've got the YouTube videos. So like you guys are telling me, this is easy, go get 10%. If I could actually show proof that I could actually generate 10%, and I know what the promises are and I know what the mechanisms are, but have you guys staked and received 10% somewhere? Like actually liquidated at 10%.
I'm trying to remember how much I got from Hex, but maybe it was
Nothing. You have gotten nothing from Hex.
No, I definitely got some stuff from Hex.
You haven't seen his Lambos. They're toy Lambos, but they're Lambos.
I'm not being a hater, but like, so for example,
Dyson. Have you used Dyson? It's the new DeFi product launched by Sphere.
So it's
You
new
can get,
and it's not proven.
I'm earning yield right now, real yield on it right now.
Is it compounding or does it only deliver?
I can pull out whenever I want. I've chosen not to pull out because I'm not staking a ton of money in it right now.
I'll look at it.
You can get anywhere from 12% to 15% a year on to 150% depending on which depending on which ones you're running on. There's more high risk pairs, more low risk pairs, but you can get. I'm getting 12% right now, staking pretty low risk asset. So it's not that hard. My trading bots are doing between 5 to 10% a month right now. So uncompounded, you're talking anywhere between 60 and 120% a year, uncompounded.
I mean, you admit that that's the exception that proves the rule, right? Like,
yes, but I mean, we're not the only trading bots out there. Like, there are, especially if you've got a high net worth. If you've got 1.6 million, there are tons of options probably open to you that I don't have access to. That we don't have access to as a collective.
Go ahead, Jarrett.
No, so if I had the 1.6 million.
Yeah.
I mean, let me just break down how easy it is. Not easy it is, but how low the barrier of entry it is to have like a pretty successful, I'm using a lot of air quotes here if you're listening to this on Spotify, NFT project. One of the guys he is just like a guru. If you need to figure out NFTs, you go to him. And before I launch my NFT for More Than Blockchain, I will go to him and be like, roast me, because if it gets past him, I believe it. His name is Brendan. And he was part of Psychedelics Anonymous, which I actually thought was a pretty awesome collection. They had like four different things. You had to have all the pieces to have a full set. It was a very interesting collection. And I asked him the other day, I was like, dude, why'd you get out of that? That's all you were, that was your Hex on Twitter. That was the thing that you were like, that was the drum that you were beating, like you were with them. You know what he said? He said they were supposed to do a merch launch and the merch launch didn't go well. And he was like, how can I trust in an organization that can't even send me a hoodie? Yeah. So that's how low the barrier of entry is. So you to have 1,000 people and you want to send them out like a hoodie, right? And if you just do that in the first 6 months, that way they're wearing it. And then you could just drop them another NFT from some cool artist. That is no money relative to 160,000 a year if that's what you have to play with. Now, I wouldn't put my money in any of these DeFi things because I, like Grant, have not seen them work over a long enough period of time. I'm just talking about go buy Bitcoin and go buy Ethereum and wait 3 years. It's going to go up 5x. That's simple. That is simple.
But you have a business to run.
Well,
Grant, you're thinking with a Web 2 mind in a Web 3 world. This is just me and my 1,000 greatest fans, and all they want is me to continue to bring them value. And they're following me for some reason. So maybe they get in behind the scenes and I get to do certain Zooms with them or whatever, or we have like meet and greets at like conferences and stuff. It's not like a business in the formal sense because you already have all the liquidity. You just need to make that last.
Well, here's another way of thinking about it. So rather than thinking about it just as a budget, you can also think about it as an investment, as an injection of capital to do something that you didn't otherwise do.
Right, so into your idea. It's a seed amount.
Yeah, so here's an example, and this isn't an NFT example, but it would have been a really great NFT example. Do you know the group there on YouTube? It's called Dude Perfect.
Yes.
Oh,
yeah.
Like everybody knows. So they recently got had a round of investments, and they got a bunch of money, and they're now going to build a theme pack. So those YouTube guys are building a theme pack.
Okay.
Imagine.
I should have focused more on Frisbee.
Exactly. Imagine if instead of going out to traditional investors, they had just went to their community and say, hey, we're going to do an NFT project. It's 1 ETH to get in. They get the same amount of money. And what's going to happen if you have the NFT, you get to come to the first year as often as you want. You don't have to pay anything.
Yeah.
All of the millions of other people that come in, they will cover the cost of the people who invested first, plus whatever else. And so all you're doing is using that money as just an injection to build something awesome that you couldn't build before because you didn't have the available liquidity.
And you're getting at my point. You're describing a hybrid model where you used it as seed and then you built something that has a Web 2 model involved. That's attendees coming to the park. They're not running that entire theme park, which is a big venture compared to content creation. To Jarrett's point, if we're talking about a content creation site like NFTNow, it's these two guys. And let's say they do mint out, and let's say they do pull 1.6. And let's say they didn't put it in what I consider extraordinarily risky DeFi systems of high yield staking. But let's say you put 1.6 in some TradFi where I'm confident I could pull 3 to 4% easy with very little to no risk. And so you're pulling very little money, but let's just say you were getting your 10%. Still, when I say 180 is one employee, and it's like, to do what? Well, you have to deliver, in the NFTNow example, consistent, high quality copy. And if you build a business I want to be doing other things, but Jay, you're describing a hybrid model of, no, take the injection of capital, build out something, give benefit. So you're talking about Kickstarter. You're talking about Kickstarter.
I mean,
There's
that's
that.
all it is. That's all an NFT really is. It's just a funding of an idea and a
Allison.
promise of potential. You're going to look at a roadmap and say, that's really cool. Just like you used to look at some invention on Kickstarter and be like, oh, I'd love to be able to sleep and run at the same time. Like, oh, cool.
Yeah.
Let me buy this NFT, which is all it was when you put $1,000 in on running and sleeping at the same time. And I just think if I had $1.6 million, I would totally be able to. It also really comes down to what you're talking about, Grant. What is the relationship that the creator has with their community, and what is that unspoken value exchange that they're going to have to continue to give? If it's Raoul Pal, all that dude has to do is talk, and I just want to listen to him because he's been around the macro for 40 or 50 years. He knows things that I don't know. So for me, I just want to hear him talk. Now, if it's someone else, like you're saying, that has to produce a blog a day that's 2,000 words is going to melt your brain. That's a little bit heavier of a lift, but it all depends what the relationship is going to be between the creator and the person receiving it. Gary V's VeeFriends, I go back, I still think it is the best NFT project I've ever seen. Every single one. Allison, I love. She's minting Raoul Pal's. We're both in. Allison and I are now in an NFT
Allison,
community.
Is this Raoul Pal's Real Vision? Is that what you're saying?
She's in, and she's been sharing it on Twitter. So Allison, I'd love to see that. We still need to connect, Allison. But when you look at Gary V's, if you dive into VeeFriends, and I've done an episode on this on More Than Blockchain, where I really go into why I think it's the best NFT project. Depending upon the NFT that you got, it gives you different access. One is have dinner with Gary Vee. One is have a 15-minute FaceTime. One is have a 2-hour Zoom. One is get an autographed card from Gary Vee. There's different levels of access that you get, which makes sense. So I just think it really, it's all that matters. And I think what Jay is talking about is definitely a great way to do it. You take the 1.6, you appease the community, send them some sweatshirts, give them something else, send them all a ledger, right? That's if you buy them in bulk, it won't be that much. You're still way under budget. People love merch. Then build something on the side and get your cash flow. Build something to be able to get your cash flow. I know you're a cash flow guy, and that's right where you went, because just having the nut wasn't enough. You want to build a business. You want to have income, maybe. This is this is the story in my head when you were pushing back on it. But I think you're totally right, Grant. If you do that, if you use that investment to build something that can then seed and basically fuel the community forever, that's the way to go. If I have 1.6 from my community and my 1,000 fans today, I sweep a floor. I probably get a Bored Ape. I probably get a Mutant Ape. I probably get a World of Women. I probably get a Doodle. I probably buy $100,000 of Bitcoin. I buy $100,000 of Ethereum, and then I just sit. And then I say, hey, community, when we go and these go, and then you guys get to decide and tell me when I get to sell the Doodle. When the Doodle, it's at 5, 6, 7 Ethereum, whatever it is right now. When that Doodle hits 50, we sell it. I'm going to give it all back to you guys,
Okay,
That's a DeFi project right there. That is
well,
literally a DeFi project.
that is a DeFi
It is,
project,
but
but
it's
that's a
less than the
security.
staking.
But
Yeah,
that's a
it's
security.
exactly, because
It
staking has
is.
never worked. And after Wonderland, I'm not going to put my money back in for a long time. And you know who I blame Wonderland on? I watched YouTube and I saw this dude who had way too much emotion about it. And then I put my money in and I still blame Grant, but I learned a lesson that Grant can never repay me for. So
No. Well, and it wasn't just Wonderland. So like it was, I went all in on all of these markets, and what you just described, Jarrett, is my problem with not my problem, my challenge.
Mhm.
Having run a company, we have this factor in business, and it's 2x or 4x. If you hire a white collar employee, a developer, some high skilled, high wage employee, the net is they have to generate 2 times their cost in revenue, and you're estimating that you have that expense that's almost like 50% more than what you pay them is what it costs you just to have them.
for sure.
In the US, in benefits and taxes, the whole deal. Then you have the 4x factor, and that is like not white collar employees. Let's just say I had a content person using ChatGPT and just putting out chat content for SEO, some plug and chug job, right? Like they need to be producing 4 times their value because it costs me about 2 times, about 2 times. So like 100% more than what I pay them to keep them around. And so when you talk about that alone, and then you're like, well, I need to get my back scratched a little bit here. So even if I just had one employee, got my budget to go to NFT Paris, to network, to build community. Let's just talk about building community. That 180K is gone. And so like, wait, what is this money doing? But both of you did describe, well, I would do this with it. And it's like, oh, okay, so you're not just staking it, you're actually trying to compound it on spec ventures. There he is. You're putting it on spec ventures, which is also not prudent or wise, because if the IRS did audit you, you'd be like, wait, you took this NFT, you took their money. What was the promise of the NFT again? And they get very particular. Why did that money go to this investment? It's like, ugh. So you have to say on the out right away, I am collecting this money to invest it. And it's like, well, now now you got SEC issues. So full stop that. So I'm going to do community building, and you guys get to participate in my awesomeness. And it's like, well, it's better be some high quality shit in terms of like the articles you're putting out or the videos you're putting out or the books. I think authors have a great opportunity to do some NFT work where, hey, you buy the NFT, you're basically kickstarting my next novel, and you all get copies of that, and I can sell that novel in the public. And that goes to the amusement park example of using it as Kickstarter. But my question is why not just use Kickstarter?
Easier to fund via crypto.
Easier to fund, faster, and they can resell
You
that
don't need
position
any
on the open
approval.
market.
You need
Exactly.
to get Kickstarter's approval to be on Kickstarter.
That's true. It's
You need
centralized.
no one's approval to start an NFT project.
That's true.
Yeah,
It's
and you have to hit
permissionless.
it's permissionless, and you have to hit a certain amount or you don't get to take any of it. So
That's a good
you
point.
know, like
That's a good
Bored
point.
Apes minted at 0.08 ETH in summer of 2021, right? I don't think it like minted out in the first 3 days, and on Kickstarter they
No,
would
it
just
didn't.
return the money.
Yeah,
You know, so like
you're right.
it also gives projects a little breathing room, like a fine wine. I want to go to Allison's comment because I think that she puts us in some pretty awesome standing. She says she agrees with me about loving to listen to Raoul Powell. I just love that guy. She says, for me, it's Real Vision, you guys, meaning not Crypto Bros, and Bankless for my learning. So
Wow.
we are put up with Raoul Powell and Bankless, which is
So Allison, this begs the
Allison.
question. If we rolled out our NFT, are you minting?
oh, she's deep in the mint. She probably already created.
She'll
the
help
NFT.
us mint. She
Yeah,
needs to
she
be on the
already-
inside.
She's gonna have us mint the not Crypto Bros NFT that she creates.
Yeah, exactly. That's too funny. So those are really valid points, and I think this is making my case here. I think crypto or Web3 in general moves into its niche corners. I think we'll just start accepting this will disrupt Kickstarter. We won't even refer to Kickstarter. We'll just say I'm minting, and people go, I get it, because it's such a superior approach to Kickstarter. It gets like that permission, like just like you guys described. So I think that this happens in all of these corners in a way. Allison's just like, yes, duh.
Of course.
let's roll. Who wants to tackle this comment from Carlos? Go ahead, Jarrett.
He says
sustainability, absolutely. That's why we see a lot of DeFi projects fall apart.
Why are we laughing? What's happened?
Because Austin's delay just had him mow right over Jarrett.
Oh, geez. If it might be my VPN.
That's okay.
Oh, jeez. He just got Canada nice on it. Oh, I didn't mean to do that.
Yeah, that's okay. But no, you're right about sustainability. Jarrett, why don't you read it, and then Austin, hit us with your comment. What do you got, Jarrett?
No, I was going to say that Carlos's comment says community is great, so are passion and dreams, but any good business model needs sustainability. Austin literally probably just went off to turn off his VPN, hop back on without his VPN. Now he's back. I've just read the quote, Austin. I've served it up hot. Go ahead.
Yeah. So what were you saying here, Austin?
This is why a bunch of DeFi projects, DeFi right now, or at least Time Wonderland, for example, if we want to use a Time Wonderland example, that didn't work. The yield that they were offering was higher than they could sustainably get. They could sustainably achieve. Yes. That's why you see DeFi collapse. If DeFi were promising the yields that they can actually achieve, and yields of 8% a year, 5% a month, anywhere between that range is sustainable depending on what you're doing. 5 to 10% a month to 10% a year, depending on what level of risk you're going with. So sustainability is totally the name of the game. And right now, projects are overextending what they think they can promise. And that's why we see DeFi DeFi businesses fail. If we start looking at that cash flow model, DeFi projects and businesses will actually work in Web3 once they stop having to overpromise to acquire investors.
I like that where the conversation is sort of like taking an entrepreneurial route, because the question that I have about this is, when we're talking about sustainability, if it's, let's say, for instance, like go back to the content creator example, where content creation in of itself isn't really a business. You might be making money through AdSense or something like that, but you don't necessarily have clients who are paying you on a monthly basis. So if you're going to try to be sustainable, in like an NFT project or a raise or whatever, for something that you want to do, like in my mind, there isn't sustainability in the beginning. Like you taking this leap of faith. It's either going to work or it's not going to work. And if it does work, then eventually you try to figure out how to make it sustainable. And that's kind of what you saw with Wonderland, with FTX, with Luna, with all of them. They tried and it didn't work out. And, a lot of people lost money as a result. But I feel like that's how business works.
Well, I think that this is how technology works. You get in there, and I made a tweet about the masculine and the feminine. I'm very intrigued at the anthropology of some of that. We can get into that some other time. But I mean that from an aesthetic perspective. That season of experimentation is just like this pioneering spirit of, look at this tech. I don't even know what to do with it yet. DeFi promises fat returns, but that's actually a cop-out in my opinion. It makes sense once the model, like Anchor was like, we're going to be conservative. We're going to promise 20%. And it was like, okay, I mean, that's cool. And they couldn't even sustain that. And so what we found from a DeFi perspective is returns start to get more and more realistic. People are offering 4% returns on DeFi now. And I got that from ING Direct back in 2007. So now we're back to TradFi rates of return, because you have to return to a normalcy as the tech gets diffused into other areas and other uses. And this is why I think we sprungboard from this DeFi surge a year ago. And then boom, then we got into NFTs, because the art and the aesthetics and the community was the thing that remained. And that started to have way more. We could get the value exchange was more clear than these highfalutin 600,000% return promises. That
easier to explain.
It's much easier to explain, but you're saying entrepreneurship, and I agree, because that's the evolution of the pitch. What pitch makes sense? 100,000% returns, that'll only get those people who have a heart of venture, right? And then you go, well, let's talk about community, because it's all I know how to pitch this as. And now, in Austin's case, he's able to pitch his trading bots. It's now very use specific. And now we're able to talk about token gating content. And now I think we're getting into the nuance of what we can legitimately deliver on. What can we legitimately deliver on? I actually think content creators will win the most, because like when it comes to a song, let's say it's a song or a book, I can mint that, and I don't know if this is going to become a Taylor Swift hit, but I know I can deliver that book to these people. I know I can deliver that song to these people. I know I can write that play. I know I can do all of that. And they will then get the reward they were promised. And that's great. Like that is such an easy sell, I think. So I'm kind of at the end of my thought, but I'm looking at Allison's comments here. And Jarrett, you look like you're chomping at the bit too. Did you have a thought on that?
No, I just think that makes the most sense. I mean, that's why Steve Aoki has one of maybe the top or more successful, if we're using success and sustainability synonymously, which we often do in business. That's why I go back to VeeFriends. Gary Vee, he's a content creator, so he can deliver. Like his delivery is easy because he's already created that relationship, whereas basically it's just intellectual property. I think it becomes really tough. Like when you're an artist, there was oh my gosh, I'm blanking on the guy's name. He's a Spanish artist and he does these really cool figures, and he minted out, and the mint was a disaster. There's supposed to be a limit per wallets, per mints per wallet, and it just didn't work out. And a bunch of people came in and just splashed cash, and they got all the mints. This is at a time, this is back in 2021 when the gas fees were really high, in 2022 when the gas fees were really high. Anyways, point being, he was a creator, but he was more oil and canvas, or water and canvas, and that's super tough. If you have 10,000 collection to appease 10,000 people with oil and canvas paintings, like if you create 10 a day, which would be a lot, well, that's going to take you a couple of years to even quell the first 10,000. So I do think content creators definitely have a lift. And I also think that they already probably, and this is what Allison talks about, they already probably have the digital community built out. Which then they just tap into. And I've said this for a long time because we've talked about creating an NFT, and I pushed back and said, we got to have some semblance of community if we're trying to make community with the NFT. And I'll give the behind the scenes on my NFT right now. But what I'm going to do is basically give everyone who's come on my podcast a unique NFT. So if you were the first one on the first season, you will have S1E1, season 1, episode 1. And that actually is going to go to a guy named John Grinnell. Shout out John Grinnell. He works at Coinbase. He's been in crypto very deep for a long, long time. He's a philosopher, in my opinion, on crypto. But he'll get S1E1, right? And then actually the second episode I did will be season 1, S1E2. But I did that one. That was a quick pod. So then I'll hold that. And what's going to happen is, eventually, if More Than Blockchain continues, and in 4 or 5 years, hopefully it's something really cool, and I have Raoul Pal on, he'll get season 6 S6E2, season 6 episode 2. And then maybe people are like, oh, I really want to own a piece of More Than Blockchain. That's a really cool podcast. So then they're going to go all the way back to Grant and buy his off of him, and so on and so forth. Can I come on your compact because I want one of your NFTs? Absolutely, Allison. That sounds great. And I want it to be something that's going to help the podcast, because people are going to see it and they're going to be like, oh, I want to go on his podcast so I can get one of these, because I want to be in this exclusive community, because every other year he has these events where you can only go if you've been on. But then also, I think it's really cool in like 2 or 3 years when Grant, you're like, hey, I need some money, right? Marissa and I want to go to Portugal. You sell one of the episode NFTs for like an ETH or even a half an ETH. But hey, that's a couple $1,000. And then, I can't think of a better way to pay back people than to give them something that will hopefully appreciate with the market, with the overall sentiment, and with the growth of the space. So anyways, that's the behind the scenes. But I was thinking about it too much, and I wanted to do all these cool things. I thought that that's what you needed to do. And now I'm just like, no, you're going to get this. Keep it in your wallet. Hopefully one day you're going to be able to sell it for a lot. And that's going to be really cool.
Yeah.
That's what Uber did with Beyonce, right? They
What?
back in the day when Uber was not Uber, when they were just sort of like young and fresh.
Oh, yeah, they sold her $30 million of shares, right?
Yeah, they
Yeah,
gave
Oh
her
my
a
gosh.
bunch of shares,
yeah,
and well, I don't know if she eventually cashed out, but it's worth millions now.
yeah.
Sure.
She took the shares. Jay-Z did a similar play too. He took equity. I think Nas did as well. So some of those old school New York hip hops. I know that Beyonce's from Houston. Shout out H Town. But I think her hanging out with Jay and them just always talking business helped both of them to become better at business and think more long term.
Oh
So,
yeah.
yeah, Brian, not NFTs will merge with social. I did a podcast on that on More Than Blockchain. Brian, I'll drop that episode, but I totally agree. They're going to be one and the same by 2026. You're not going to see a difference on many social channels.
I predict content creators will, the guys and I spoke on a call the other day, a private call, and we were talking about each of our projects. More Than Blockchain with Jarrett down below has a pretty advanced, is the most, I think, the most rounded out vision. But Austin has a mint, and Austin has a killer project with trading bots. And the mint is really just for that investment. There's no like graphic to it. It's just like, boop, here you go. And so that's a pretty mature use of an NFT that no one will necessarily see, but it's directly connected to the trading contract. So that if I put together a pool of investors, instead of me kind of facilitating all that money, they each have their own contract, their own NFT, if you will, and then they get disbursements based on that. You made a great comment there, overthinking it. I think a lot of content creators are, and this was, I'm giving everyone insight into what we were talking about as we were talking about building. And I used the word bookmark. My big thing was this: I have a very strong, robust vision for my non-location nation. I told these guys, and not many people, but the people watching will know this. Back in 2008, I had envisioned a non-location nation of people that shared same values. And so we were like a layer of society on top of society where we were intelligent, informed, enriched, working remote businesses. So I went looking for a digital currency that was transcendent of the US dollar. And it took me till 2011. I found Bitcoin. I thought, this is amazing. And so my idea matured from there. I want to issue NFTs that serve as your ID pass, but also kind of like a founder's mint. And there's all this stuff I want my smart contract to do, where if, Austin's a citizen, he can say, hey, I want to attach this to the project. And then there's disbursements that everyone gets enriched with as airdrops or all kind of cool stuff, Grant. Well, I haven't published my first NFT yet. And it's like, you know what? I think a lot of creators are having huge eyes on what they could do, but we don't have all of the technology and resources user friendly yet. And so we're going to start doing what Jarrett just described, I think, and that's just issue your NFT, and it will serve as a bookmark. And as you have resources grow and as you have more user-friendly apps and dApps to mint your stuff and work with and do more dynamic things, you could always go back to that contract and go, okay, these 1,000 people were my guests on More Than Blockchain, or, these 1,000 people were my early founders mint for the State of the Spark, the non-location nation, and they didn't get anything out of it other than that whole kind of like a whitelist mint, if you will. And now I can retroactively go back to that contract and now airdrop them a ton of stuff into their wallets. So that bookmark concept, I think you're going to see a whole wave of services being served up to just do basic mints. And I think you're going to see over the next 2 years, nearly anyone who's got their foot in this or their finger in this pie at all, they're just going to start issuing. Here's my own mint. It's 0.01 ETH to mint. Just get it, put it in your wallet, move on. It's commemorative.
Yeah.
And if I ever build anything,
Yeah,
it'll happen.
it
Go ahead, Jay.
100% makes sense from a marketing perspective that NFTs and this stuff are going to take off. I can't tell you, like I consume a lot of YouTube now, and there's so many commercials that have nothing to do with me.
Sure.
Just random. I'm thinking, like, why in the world would they show me a commercial in Dutch? Like I don't speak the language. There's nothing I've ever encountered that I would let them know that, okay, maybe this is gonna make sense to Jay. No, but they show me weird language commercials all the time, But if they were like, if I had a bunch of NFTs and they could like see what NFTs I had and they could align the commercials to the stuff that I'm interested in, I'd be 100% on board for that. I mean, if I got to see the commercials, might as well show me stuff that that I'm interested in. But
Yeah.
before you run out of time, let me throw something in there. And this has
Okay.
been something that's been on my mind for the last couple of days, because I've been spending a lot of time with ChatGPT and like
Oof.
image generation type stuff, Midjourney and stuff like that.
Mid-journey's huge.
AI is taking off.
Yes.
Last year it was Dolly. This year it's ChatGPT, and you're seeing a lot of people just taking that open source
Yeah.
code and creating some really cool stuff with it. I feel like AI is just a lot more AI advancements than they are Web3 advancements. And in my mind, that sort of means that Web3 becomes, in people's minds, not something that's as productive. And if you want to put your time and money and investment into something, probably not in Web3, because it like I think of it, people might be thinking of it in the way that we thought about other technologies like biotech or like self-driving
Interesting.
cars, which we've been talking about for decades, and they're
Yeah,
only
yeah.
now sort of coming into fruition.
Yeah.
Web3 might find itself in that bucket just because it's not progressing as fast as the other technologies around it.
Oh,
Well,
God,
props to, wait,
100%.
time out. Props to Austin for holding his horses. I wanted to say that. So Austin, by all means.
Jay, come out spraying.
Yeah, I 100% disagree that
With
Web3
which point, though? With which point?
with that DeFi and Web3 is not advancing at the same level or quicker than AI. It is the developments that are going on in Web3 and Web3 tech is absolutely insane. And you have to be like, I don't even know everything that's going on, and I know that what's going on is insane. And there's just so many different things that are being built in Web3 and being developed on Web3. We can talk about, have you guys heard about the ORCs, their new type of coin that can be completely cross-chain on EVM without having bridges. So you don't have bridge hacks anymore. Cake,
How do you eliminate?
which is part of Pancake Swap, is building this right now, and that they've got this working, or they're getting close to rolling this out. So right now, if you were to basically bridge, I don't know, let's say Cake or ETH from one chain to another, it has to be held by the bridge, and then you're essentially offered a wrapped version on the other chain that you're going to. These types of tokens, now, if you want to take AVAX from Avalanche to ETH for whatever reason, you can, there's still a bridge involved, but basically it burns that AVAX on Avalanche chain and mints it on Ethereum chain, which means now there's no multi-million-dollar hacks that are happening in DeFi and in Web3, because there's no bridges holding
the funds,
like crazy amounts of liquidity.
Is the limitation to that, like in a Bitcoin example, if you burn the Bitcoin, then it's gone forever?
Bitcoin's the only one that doesn't work, because we don't have the ability to, like, there's no smart contract necessarily really that can be existed or ported onto other chains. Any other token could have this functionality.
So I want to give some credibility to Jay's thought here, or I would like to add language on how I think Jay might be correct, but in order to legitimize what Aussie's saying about Web3 and crypto, if that's okay. So, because I agree that Web3 and crypto is making massive progress and developments. If you look at, I think Jarrett, a shout out to More Than Blockchain, had 2 guests that have been funded by A16Z, Andreessen Horowitz. I mean,
Nice.
There is money being dumped, but I want to give some credibility to what Jay is saying. ChatGPT alone has made for the user, the retail user, onboarding so simple to an AI that not only creates content, but has eliminated search. So I would say that the gargantuan impact that ChatGPT has made to a retail user, and then right on its heels, the awareness that brought of, well, what else is out there? Right Sonic is annihilating the competition. Bard has come online, and Microsoft bought ChatGPT for 11 billies, I think it was.
Bought or
And
bought in? Did they buy it?
good distinction. I don't know, but they've said, well, we're not trying to get into the search and ads game. And you're like, wait, then what game are you spending 11 billion on?
Mhm.
I think that the apparent impact has been to the retail user so much easier than we have made crypto and Web3 to the retail user. Robinhood made some strides. Coinbase made some strides, but
That's a
all
really
we
good
know,
point.
we only understand the trading side, but the tech, like Austin is saying, and the tech that's undergirding, I do think that from a, like, if we were just to look at patents, the patents, so to speak, and I'm using that in a symbolic way, the patents stacking up in Web3 would put the patents stacking up against AI to shame. But the impact on the end user, the headlines, if you will, the immediate gratification of ChatGPT, right, Sonic, I would argue, Jay, like, that is a point that I would completely agree with. But I have to also give credence to what's going on under the hood in crypto, because what crypto is doing for branding, and how, like, I'm looking at going to Possible Miami, which is a marketing conference in Miami, because I want to see what crypto is just devastating our perception of community building and micro brands. So I think that there's a lot going on in both, but I think one is hitting a target niche in a very broad way,
Mhm.
and I think, or in a very deep way, and ChatGPT is hitting in a very broad way, but very shallow. Is that dynamic kind of? That's
Yeah,
kind of how I've been
right.
seeing that, if that makes sense.
It makes sense to
Jarrett,
me.
what's your thought there? You look like you were chewing a thought.
Yeah, I mean, I think Jay and Austin are both right. I don't think that they're no, I
That's
don't
what I'm
think
saying.
anyone's wrong, essentially. And I
Come on,
think
Chad, pick a side.
I'll be Switzerland or Kentucky in this
It
one
makes for
because
better TV, Jarrett.
it does. Yeah, let me get my Maury on. I you know what it is? I just think that if you look at ChatGPT and you look at what some of the bigger things in AI and the bigger leaps, they're really, really centralized, right? Like OpenAI has done a lot, but when you look at crypto is allowing financial resilience to happen around the world globally. Crypto is supporting
In
immigrants
emerging
that have
markets,
to
yeah.
leave. Crypto is supporting people in emergency situations. Crypto is supporting people that are under dictators. Crypto is supporting people who are seeing their currency devalue. AI is like a nice to have. Crypto is a need for many people on the planet. So I think that Web3 tech, and I also just think the definition of technology doesn't have to be as fancy as ChatGPT, which is absolutely amazing, and I think it's really awesome. It can just be as simple as like a MetaMask wallet, and I'm just exchanging Ethereum with someone on the street for some pineapples.
Yeah.
Tech is for me defined as like what we most need in that moment to be able to be better. And I don't think any of us need AI. It's just like a really, really comfortable couch. But like another couch still works. So I'm really excited to see AI continue. I just think that the amount of people that have influenced AI on the planet are a percent of a percent of a percent of a percent of a percent, whereas the amount of people
Yeah.
that are influencing crypto daily is
Yeah.
much, much, much larger. So while I
Yeah.
do think AI's bounds and leaps ahead in many ways, I also think that its adoption is different than crypto's adoption. Crypto's adoption is slower, and it's person by person, it's peer to peer. When you can just create chat GPT kind of log on, create your user, and then just play with it, are you really into it? I would argue that when you buy an NFT, you're way more into Web3 than you ever are actually into AI. So I do believe I like the shallow and the depth is
I
even
don't know. I would
is even
challenge
bigger.
that, bro.
Oh,
Like
that one's
When
like
you're playing with
optimistic.
AI, you're just
Yeah.
investing your time. When you go and you mint an NFT, it means that you've probably gone through some KYC or AML if you're in the United States or Canada. You've had to put money into a centralized exchange. You then have to take that out and then you probably send it to your MetaMask. And this is like a pretty basic example, but there's a lot more steps. It's a lot more thought out, and you're actually playing with your money. The second you start using your money, I just think that there's a whole different buy-in. You know, if I'm like, hey, do you want to go see this band? And you're like, oh, sure. I'm like, it's free. Come on. And I'm like, hey, you want to go see this band? It's $10. Ooh, what genre is that? Ooh, I don't know. I got to do laundry. You know what I mean?
Well, I mean, I think you just muted yourself, Jay.
Yeah, my bad. I was gonna say the other way of thinking about it is if you pay money for something and then it ends up not being good, like Wonderland, like Luna, like
Oh, yeah.
FTX, you pay money for it and it doesn't work out, I'm probably never going back there again. But if it's free and it doesn't work out, I'll try it again. Like, how many times have you had bad experiences on Twitter and keep going back?
Interesting.
I disagree. Like, yes, people have bad experiences, but it doesn't like, and you do like, we have lost people from crypto. The bear, like we've seen that in the bear market, but it doesn't necessarily mean they're gone forever, because we're seeing people who potentially were hurt by Luna or hurt by FTX or hurt somehow who are in the Starbucks rewards program who are now earning NFTs and are part of Web3 without knowing it.
Yeah.
Or you've got Spotify where, you know what? Hey, you've got this NFT now that's being dropped to you because you're one of the top 1,000 listeners or 10,000 listeners to this artist. And
something to not forget here, though. Well, 2 points on this. To Jarrett's point, I think I used ChatGPT for 3 separate clients today. I generated 2 articles for both of them for search engine optimization in the first time it took me 28 minutes, written, search engine optimized on a topic. And then the second time it took me 22 minutes because I got better. And the next time it took me literally 18 minutes. This used to take us 2 hours. And I charged real money for that service that I was normally charging the 2 hour. We're not on an hourly basis necessarily. I am one of millions of small business owners, not just in the marketing space, who are seeing real impact that they control. And I hear you, but I don't know if I agree with the argument that those who are using NFTs are more vested than those who are using ChatGPT. I do think that Web3 will, over the long term, affect more people in a much deeper way. But I personally don't know if I would use that same argument myself. I don't think it's the strongest form of the argument, which I still think is strong. But we can't forget one other aspect about AI. AI is self-learning. And by that, I don't have a Web3 tech learning from itself and then issuing a new version of itself the next day. Go ahead, Jarrett. What's your thought there?
So ChatGPT isn't learning from itself. And this is something that I think I need to say out loud. This is confirmed by my buddy who came on, who's an AI expert who lives and works in this. ChatGPT is just a learning. It's just, it stopped in 2021. If you ask it questions about 2022, sometimes it doesn't answer them well because it only has basically information up to 2021. It's not actually learning from itself. If you listen to the episode of More Than Blockchain, I'm not very vocal about this because ChatGPT to me is not my field. It's like if you ask me about rugby, I get the general idea, but I can't really speak in depth about it. But ChatGPT isn't necessarily learning. It may seem like it is, but as my buddy says, it's a really nice parlor trick. So
I would go toe to toe with this MFer.
Yeah, 100%.
I would go toe to toe with this MFer. And it's not just thinking. The data set it started with ended in 2021, but the data set it's now acquiring by our use every day is being stored in the big data. And this is actually what was the case that Microsoft made for why Microsoft vested into it, because the data that it's gathering. Now, I don't benefit directly from the learning. but the data set it's building does make its algorithm smarter. But not only that, let's say this guy is right about ChatGPT and you toss it, nearly every other algorithm is learning from itself. And there is, I would agree, there is a major Parlor trick going on because it's the language model that's really
Exactly.
learning.
It's a language
But
model. Yeah.
what at minimum, what it's learning is its language model, which means that's what matters most to me as a user.
But I also think, so I agree with you, Jarrett. It's not learning new things about the world. Like, it doesn't know anything that happened in 2023, but it is learning new things about its users. So like, I use it all the time. And let's say like today, I ask it to do something in a really specific way. And I come back 10 days from now and ask it to do something similar. It will do it in exactly the specific way that I asked 10 days ago.
Yeah.
But without me having to prompt it, because it's learned what I want from it.
So I had this exactly that exact thing what you just said, Jay, when I had Andy on my podcast, and he basically said AI knows you just like the way your car and the example he gave was just like the way when you sit in your car, cars have presets. So you can be like, oh, Grant's sitting in the car, Marissa's sitting in the car, I'm sitting in the car, somebody else is sitting in the car. That's how well it knows you. So it may seem like it knows you. It may seem like it's picking up, but it's really not. And it's a Parlor trick. And
what?
You got to listen to this episode. This episode,
I'm gonna listen to this episode.
This episode was the craziest episode I've ever actually recorded because it's not in crypto, it's not in Web3. But I called my brand More Than Blockchain because I want to be able to touch into these things. I think AI plays a huge part in everything we're gonna do. You know, like I can't black out machine learning. I can't say AI doesn't exist. Like crypto happens in a vacuum. So you really got to listen to the episode. But it was very fascinating, and I think one of the quotes he starts off with, he was like, you know, we were all promised the Terminator and then we got Siri, you know.
That's good.
He's one of the most well-spoken people I know about just the world and the way that he can kind of break down these concepts. But I think the way that we look at ChatGPT, we give it more than maybe what it is. Not that it isn't one of the more amazing things I think any of us have actually played around with, but you know, ChatGPT 4, ChatGPT 5 will have newer updates from the learning model, right? Which will add in things. I remember I asked it, I said, hey, who won the World Cup in 2022? And it said, hey, I don't know, but these are the teams that would probably be most likely, to win. Austin had to hop off for a second. Maybe he'll be back. I do realize we're way over time, so maybe we just want to call
this is important. We probably should wrap. And I won't open this up, but like I would seriously challenge this dude that on any of this, because to say something is not learning is I don't even know why I'm defending it. It sounds insanity. That's like me saying Jay's not a person of color. Like this is literally the definition of what this thing does. And I know that like it's easy to say it's a Parlor trick because that's a great soundbite. So I would love to talk to this guy. I'd love to talk deeper about AI because I don't mind my paradigm shifting on this at all, because I know that like specific AI, which is a lot of this stuff like a Google search engine, and this itself is a specific AI. It's a learning model. But like I know professors who will upload their doctorates, and when someone else has their own instance of ChatGPT, they can reference that new PhD. So I call bullshit. Like it's being loaded. Now, maybe they have a certain agreement. Maybe there's certain paid tiers for certain educational institutions. Maybe there's certain use cases, but like I had a guy on, I did a ChatGPT office hours the other day, and I had a guy on who was talking about this, and he's like, no, we upload our degrees, our PhD dissertations, and we can all reference them. And it's like, okay, so like who's having what experience here? But I'll listen to the episode and we'll talk about it more.
I would listen to the episode. I'm just the messenger from what I've been told. It's not my field. I really, it's the episode. It's one of the longer episodes I've ever done.
Yeah.
And it's the episode where as a interviewer, I normally can flow through and find questions and build the narrative. I had multiple times where I was just like, dude, hold on. I need like a minute. Like I can't, just give me a minute. And obviously you don't hear any of that.
Yeah.
Right?
Yeah.
But there was probably 3 or 4 times for 15 seconds where I was just kind of like, Jesus, like, am I in the wrong thing here? Like what is going to happen? You know? Yeah.
Yeah.
Well, I like the analogy of like it understands you as much as your car understands you. But I think
Mhm.
the analogy only works if you don't think of your car in the same way that you think of a person. And not that, I know a lot of people,
This
you're
is
gonna
true,
feel
Jay.
like human beings are humans and machines are machines. But like at a fundamental level, like what really is the difference at like an atomic level, right? Like there are things that are happening in the human body that we can't explain, and that sort of leads us to believe that the way that we think and process stuff is different than the way that machines do.
Yeah.
But this is just me. Like I think in the future we come to figure out that there really isn't a whole lot of difference between us. It's like you said, like chimps, apes have what 98% of our DNA, not 96% of our DNA. It, there really isn't that much difference between machines and people.
And that's the thing, like, so, right, going back, well, we can round it out with the example I
Yeah.
gave, and I think I gave this example off camera. So the example I was telling Jay was I was at a zoo, and one of the zookeepers came up to me and he's like, "You see that gorilla?" He's like, "The difference between you and that gorilla is 98.64% of your DNA," and that number will always be in my head, whether it's right or wrong or I heard it wrong, but it's such a massive amount. So then you look at that 1.3% difference that somehow made us able to build skyscrapers,
Yeah.
create ChatGPT, have something called a podcast, whereas gorillas are just going to be eating lettuce and being with their community, whatever that looks like for the rest of their life. Like they're never going to build a skyscraper. So
Yeah.
what you're talking about, Jay, if robots, if robotics, if AI, if all of those things can get even 98%,
Yeah.
it will seem so close that
Yeah.
it will be indistinguishable.
I think
And
so.
there's a great article, and I don't know if I could find it, but it was talking about, the 36th best tennis player in the world or something, and how hard this person has to train every single day, how they have no friends, how they have to eat of like this
Yeah.
grape, but not that grape. And yet they're 36th. So for us standing on the outside, we look at that
Yeah.
and we're like, oh, you're training between Roger Federer and you is, I can't tell the difference, but they can tell the difference. And that guy
Yeah.
will never beat Roger Federer. So
Yeah.
the difference is all relative in perspective. And I think we'll leave it there. All the episode, check out the show notes, and I'll leave the AI episode first thing. And you
Please.
can go check it out. And Grant and Jay, honestly, listen to the episode. It was one of the crazier
Yeah.
episodes I've ever done. And actually, Andy has agreed to come on. He's going to come on every quarter, because every 3 months
Okay.
he's like, dude, I need to inform people what's going on with AI. So yeah.
All right. Well, with
Nice.
that, everyone, thanks for stopping by. We appreciate all of your participation and letting us go over. We'll see you next week on Not Crypto Bros. Thanks so much, everyone.
Peace out.